very happy to have be in such a good company. You are all the brains behind the passive industry. I think between you account for a substantial market share of passives. So good to have all of you. एक चीज़ मैं बहुत क्यूरियस होता हूँ ये पैसिव फंड्स के बारे में. इतनी सारे प्रोडक्ट्स डेवलप होते हैं. ये आप लोग फंड हाउसेस सोचते हैं कि अमन सोचता है कि अमन अपना बिजनेस बढ़ाने के लिए ये लॉन्च कर दो, वो लॉन्च कर दो, मैं ये बना देता हूँ, मैं वो बना देता हूँ.
No, I'll add here.
Aman is the head of NSE Indices.
Yeah. No, it's a good question. In fact, क्या होता है market से जब when you get feedback and there is a brainstorming which happens internally, then the same brainstorming happens with Aman because I can say Aman is a live computer. You know, if you want anything, without computer, ask him questions, he'll be able to give you market data. So definitely, some of the other way, indirectly, Aman plays a role in designing all the strategy. So thank you, Aman, for all your contribution.
Okay. So I wanted to just go around and ask each one of you that what are the big trends that you feel which are playing out in the ETF and the index fund area? I'll start with you, Vikash.
Yeah. So yes, index funds need to be simple. At the same time, we cannot take away that credit to, they cannot be innovative. So since morning we had a lot of discussions, a lot of, discussion on how to use, how to include passive funds. I think the previous discussion which Sri Hari has been fantastic, just keep it simple. At the same time, I'll take through two aspects. One is smart beta. There are a lot of things are happening. We should not forget about it. But one thing which comes in my mind, which is the low volatility. Okay. Morning also, Mirai discussed about it. I think that's a fantastic product. I'm forgetting the AMC. Sorry, iPro. I think it discussed. So that's a fantastic product you should have in the portfolio because we always talk about returns. We don't talk about risk. Okay, if you want higher risk adjusted return or you want to manage your risk in the portfolio, I think that is a fantastic concept one should pick up. If you are in first time in the industry, I think this is a product one should have in the core, which I discussed in the morning, core and satellite. Core can be low volatility strategy. Coming to themes, yes, there are a lot of themes. If you look at India growth story, the major four themes which India is driving is consumption. Your IT, telecom, healthcare is biggest, especially post-COVID. People have realized that, they can't be their self-doctors, so they have to do a lot of tests, and a lot of facilities are available. And the final is the banking and financial services. Apart from the traditional banking getting into core, retail credit, the spread is increasing. A lot of innovative sectors like insurance, credit card, like broking and financial services, those companies that are getting listed. So these are the big four themes which I believe you can play around to begin with. But of course, this has to be done by a professional investor or professional advisor, people like you. Yes, there are a lot of people who understand the risk behind it. You can have tactical approach using these themes. Of course, we can hear some other ideas also from them. I'll talk about on that later. Shaily.
Hello. Hi, everyone. So the trends in passives is what we are discussing right now. Before our recent launches, what we did was the larger overarching trend, what we observed, of course, was the percentage of passive AUM as a overall percentage of the overall mutual fund AUM has increased from about 8% 5 years ago to about 15 to 17% currently. That was the overarching trend. What we did after that was we broke down the passives data of ETFs and index funds, and we took out Nifty 50 and ETF and Sensex ETF and index funds. When you do that, because they mask the EPFO money, sits a lot of EPFO money sits in those indices. When you take away that and you break the entire space into various buckets, which is strategy indices, market cap indices, and sector and thematic indices. If you do that, you realize that index funds as a format is very active in terms of the activity of inflows, outflows in market cap indices, strategy indices. The AUM is also larger in index funds as compared to ETFs, only if you consider these two buckets. And there is a reasonable amount of split between ETFs and index funds in terms of fund presence. The third bucket, which is sector and thematic, we realized that their ETF is heavy because Nifty IT and Nifty Bank are two ETFs or two indices which are more insti oriented. So to say, that's why they have a lot of activity. If you leave them out, all the sectors, they don't have presence by the index fund format. So index funds are a good format because we saw that in the buckets of strategy indices and market cap. So they are a comfortable format. People are embracing them. But in sector indices, the fund presence was not there. So we brought both these things together and we launched index fund sector funds. And that was the larger trend that we saw, that people will, there is a camp which is very strongly there for index funds as well. And there are camps for ETFs as well. So that's, largely the recent trend that we observed.
So, Aman, I want to ask you this question. आप कौन सा फंड मार्केट में लॉन्च होने के लिए वेट कर रहे हो? जो आपके पास में कौन से एक्साइटिंग आइडियाज़ हैं जो आपको लगता है कि एएमसीज ओवरलुक कर रहे हैं?
Okay, so good afternoon, everyone, and thank you, Prem, for having me on the panel again. And before I answer that question, let me congratulate you to conduct this session every year. First of all, it is more than the praise that I've got from Prem. I'm overwhelmed by what Sanjay Bhai and Viren Bhai just said. With what simplicity he mentioned about a simple, humble product, which is passive, right? It only gets to say one thing, that what we're doing is the right thing, right? So a big round of applause to, again, Sanjay Bhai and Viren Bhai. Thank you. I don't think there's any index idea that we're not discussing with any of these, right? We are strongly engaged with almost everyone. And as you mentioned, a lot of brainstorming happens and a lot of ideas come out of this brainstorming. And the collective effort of that and output of that is that today, in FY24, for example, we've reached 9 trillion. Last year, same session, we were 7 trillion. So it's a phenomenal growth, right? This year, we've added, 60 new passive funds, 50 equity, 10 fixed income. 50 passive equity fund is like one new fund every week. Again, that's phenomenal. More specifically, if I want to talk about the nature of funds that got launched, passive funds that got launched, 30 out of these 50 funds were non-plain vanilla. So they were exotic, some form of exotic. So it could be thematic, it could be a factor smart beta index. So that also talks about the appetite that this industry now has reached to. So maybe 5 years, 10 years ago, we used to talk about Nifty 50 and nothing beyond Nifty 50 because there's no liquidity. And there was no appetite to go beyond the large cap spectrum. Today, over the last 1 year, more specifically, we've launched exotic index strategies like alpha, momentum, value, quality. So we're talking about index, I don't know if there's a term like that, indexize the active management. So if fund manager is picking the stock using discretion, can we indexize that, right? And that is smart beta, right? So this year particularly, Prem, momentum strategy stood out. Alpha as a strategy stood out. And while the AUM is small because we've just started, but we are 8%. So if I were to talk about thematics, new themes, factor indices, smart beta indices, of the 9 trillion AUM, we are around 8-9%, right? The other being plain vanilla. Globally, this number is around 20%. So there's still some way, to go before we reach that number. So yeah.
Arun, you won so many awards today. So first, you have to treat me to a drink this evening. And second, tell me, what are the opportunities that you're looking at in this area of, and I'm talking specifically, we'll keep our discussion focused on themes, and in themes I also include sectors. Okay, so we'll keep the generic this thing out. I'm talking about sectors and themes.
Sure. So first of all, before coming directly to your question, the big picture, a lot of us have been talking about numbers since morning. So in fact, somebody mentioned that 24,000 crores of net sales have happened in equity index fund in the entire year, right? In the last few months, almost month on month, and this data is published by Amphi, nearly 3,100 crores of net sales is happening in equity index fund, okay? Now, compare this with active funds, okay, where the net flows tend to be about 22,000 crore, and there is a large SIP book, which is yet to be built in the passive space. So if you take out SIPs, which is again historical and legacy, the incremental flows are actually higher in passives now than in active.
Oh, that's a good.
Yeah, so this is actually a big trend. So it's not small anymore, right? While an absolute number, it might look small. So this is something that all of us need to keep in mind. But having said that, we must also understand and acknowledge that we are still in early stages. We talked about while the overall numbers is 9.6 lakh crores, a lot of ETF money is institution. In fact, less than 10% is individual money. And index, again, it's 50-50, right? So individual investor money is only roughly about 1.75 lakh crore, roughly, right? So which is less than 5% of the overall mutual fund industry. Still early stages, we have a long way to go. And the big trends again within that is that the core products, right, like market cap-based products like Nifty, mid-cap, small-cap, that's where bulk of the AUM lies, and it's not just because of EPFO. Even in terms of incremental flows, ex-EPFO again, a large part, almost 50-60% comes in these kind of products. Okay, the reason obviously could be that people, at least to start with, think of taking exposure to market, a simple exposure, and later on probably to add to products. Now, having mentioned that, Shaily spoke about it, Vikash spoke about it. Some of the categories, like for example, the smart beta, the factor-based product, they're picking up. In fact, the net sales there even now tends to be about 15-20% of whatever is happening. Incremental launches are happening in that space. In fact, we noticed that in the thematic space, including factor, almost out of 2,500 crores that got raised last year, nearly 1,300 crores came in the factor-based product. So that's where a large part of the action is happening. The rest of it is marginal at this point in time, especially if you leave out this and talk about other thematics, like it could be manufacturing or a housing. Unfortunately, the action is yet to pick up, but remain optimistic that it will at some point in time.
So, I think everyone has talked about India as a market. I think globally, if you see, thematic is becoming big in passive, right? If you see the global AUM in thematic today, it is about $280 billion. US alone accounts for about $90 billion of assets in thematic ETFs. In the last 10 years, if you see the growth in terms of number of schemes which have got launched. So there were about, in 2011-12, there were about 140 schemes globally. Today there are 1,400 thematic ETF schemes available in the world. So India will catch up this trend. We'll get onto this bandwagon for sure. We have a sizable active thematic market in India. And today, if you see, I'm not trying to advocate active here, but I'm just trying to give you a thought process that from last 11 months, if you see the trend, thematic funds in India are getting the highest flows in the industry, net sales. So it's just about time that you would launch beyond factor funds. The industry would launch a lot of funds. So it can be based on your healthcare innovations, because we have a large industry towards that. It can be, we have a nascent stage in AI, but innovation is large theme, which is catching on in India. If you notice, innovation index for India in the last 5 years, 6 years have moved from 80 to 40, right? So you have many sectors in India which have started forming. You have fintech, which is financial services as a sector, beyond tech. So tech everyone knows, but beyond tech you have retail, you have healthcare, you have finance. So there are many sectors which are getting onto this bandwagon. I would not hesitate in thinking that Aman will come forward and say, wait, this is the first fund. This is the first area we have to put out, because it comprises of 6-7 sectors. And it can give you, I would say, diversified investing in thematic space.
Yeah.
Okay, so I have a slightly different view. And if we break it in, let's say, in terms of what's available and what's forthcoming, or what is already existing, but the scale is not there. So a lot of sectoral thematic funds are there, even in the healthcare space, auto space, and multiple other spaces, where we have yet to see any flows coming. Flows in terms of themes are still concentrated to probably banking and IT, whether it's a ETF universe or on the index fund size. The other area, which is a blend of market cap plus smart beta, is probably a big theme that all of us are betting on, and that's why Aman mentioned about factor funds getting much more launches and activity in that space. Now, investors have that large cap, have that mid cap, have that small cap. Is there a better way to own that same set? So if I want to participate in small cap today, I know my investor is going to buy small cap because of what has happened over the last 2-3 years. Is there a better way to give investor, or is there a better way that the investor experience will be over the next 3 years? So factors like low vol, which Vikash mentioned, or factors like quality over a mid cap or a small cap, so that the investor experience is better, is an equally strong strategy. It may not be a theme per se, but then you'll see strategies like probably yes, today, because of past performances, momentum and alpha is the most spoken about strategy, and hence a large part of flows is also directed towards that. But there are such other baskets like low vol, quality, weightages. So equal weight, for that matter, is globally a big phenomenon. In India is relatively much smaller. There are hardly about 8 to 10 products. So one is, yes, the pure sector play, which beyond certain sectors today becomes difficult because of a pure play available in India on those sectors. But then overlap on the existing market cap products itself is a strategy that is building up, and I think will become significantly large.
So Gurjeet made an interesting point, and I wanted to come to that next, which is there enough opportunities available? So someone had mentioned in passing fintech. So would we be able to launch a fintech fund or AI or, many other exotic categories? Is there enough depth in the Indian, and are there enough opportunities available?
So the short answer to that question is that no, there's no enough depth and availability of stocks also. But does that mean that we should then not launch these thematic strategies? The answer is no. We should definitely try. For example, Prem asked about what strategies are we working on. I'm not sure. I was not sure if I should disclose that, because you typically work with mutual funds one-on-one, brainstorm and then launch it. But a couple of strategies that if I can discuss, and then also answer, how do we go about creating those baskets if there is shallow market? EV, for example, is an emerging theme both globally and in India. Now, there's no pure play EV in India, right? The strongest brand recall of EV is Tata Motors today, right? Because we can touch and feel that from an EV perspective. But even Tata Motors, for example, would not have a significant portion of their revenue coming from EV today, right? So what do we do then? Now, when we create a basket which is EV and ancillary around EV, which could be, autonomous engine manufacturers and new age technology in automotive. So the theme widens. So we say, so we applied an approach, which is an ABC approach in EV, for example. So what is this ABC approach? A is auto. So all auto manufacturers who are manufacturing or plan to manufacture vehicles. B is all battery manufacturers. So, even if you're not manufacturing a car, but you're supplying a battery or a component to the battery, right? C is any component which is predominantly going to be used in EV or new age technology, for example, right? So while there is no depth, does not mean that we have a binary no to that. We would want to maybe dilute that theme for the moment. It start off with a 30-35 stock basket, which is not a pure play EV basket, but maybe EV plus ancillary around EV, which could potentially also include hydrogen cars, for example. So anyone gets into hydrogen car tomorrow, any component, any technology, any battery towards that would become a part of our basket. Other theme that we are working on presently, which is exciting, is tourism, right? So tourism is another theme which is equally exciting, because post-COVID, tourism as a sector or a theme has picked up, right? Now again, we don't have pure play tourism stocks available, right? But again, how do we go about creating that basket? There are ways and means of achieving that. The idea is to get a beta exposure to stocks which would do well if tourism picks up. AI, the most talked about topic. And the more I read about AI, Gen AI, NLP, the more I get excited about the potential that AI has. As an index company, we want to create an AI index, right? We are also excited about using AI for creating indices. So not just having an AI basket, but using NLP to read annual reports, which could automate, do something that an analyst would do in 15 days, maybe in 1.5 hours, for example. I look at it this way. If AI is even 20% wiser than us, or let's say an average human being, the potential achievement that it can see is humongous. I was watching a documentary on human DNA, and all of us know that we share a large part of our DNA with chimpanzees, right? 86% to 98% of our DNA with chimpanzees is identical, right? Which means incrementally we are only 16 to 2% wiser than a chimpanzee. And look at the achievement that we humans have made. We've got civilization which no one has, right? So extending or extrapolating the same, if AI tomorrow, just hypothetically, becomes so powerful, what achievement it can make is beyond imagination. So, these themes, these ideas are exciting. Whether they are practically replicable or not is a matter of time and practice.
Fantastic. I was going through a list of, I used ChatGPT to generate a list of themes which are very popular overseas. So I'll just read out the small list. It's robotics, AI, solar, clean energy, video gaming and esports, lithium and battery, cyber security, genomics, electric vehicle and future mobility. Which of these do you see happening in India first?
So, Prem, I would like to respond to this and also add to what Aman said. So, India has been a great system integrator. We saw that in cloud computing. We have not been original cloud space owners or innovators there, but we've been great system integrators. However, we are getting there. Not that the AI revenues from many of the companies are big, but a lot's being done and IT spends are moving there. So in a couple of years or 2 to 3 years time, you would see some scale up happening there. But if you can, put rules to some of the indices and create indices in a manner like we did for our first the first indice of which we initiated with NSE independently, which was the Tata Digital Tata India Digital Index, where we put a cap of 50% on IT-enabled services companies, so that the other 50% can actually be captured by new age companies where IT is all permeable, like consumer services or telecom or even financial services. And now as AI would pick up, if there are independent AI companies apart from the IT services companies which are generating revenues via AI, that would come into the net of this index. The other areas where India is doing a lot of work is renewables, for example, and whether it is about energy generation through non-fossil fuels, transmission of them, distribution of that energy, or storage of that energy into batteries. Now, we don't have a separate index to capture the renewable work which is happening in the renewable index, but infrastructure index, the multi-cap infrastructure index, which again we initiated with NSE, captures a lot of it because India now the share of renewables is expected to go up from 42% to about 64%. So that's one way to capture. Then the other route is a lot of work is happening on the semiconductors and the electronic manufacturing piece. So of course we have a manufacturing index, and the PLI aids very well and provides a lot of allocation to, apart from the auto, pharma and other usual sectors, it also allocates a lot more to, the semiconductor space and this. So via manufacturing index, because manufacturing theme is very, very wide. If you want to truly represent the manufacturing theme in its entirety and take each thread of it, it can be done in a diversified manner to active, and you could have an index which is picking up this theme in entirety. Similarly, a lot of work is being done on infrastructure and through the national infrastructure pipeline route. The unique things which are happening is inland waterways. Some 14,000 kilometers of inland waterways is being opened up to transport. You have again work happening on renewables. You have a lot of work happening on roads, highways, and railways. Bullet trains, first time things happening, unique type of tracks. So all these does not have independent indices, but one or two large themes, like an infrastructure large theme capturing multiple of these newer things, and multi-cap, manufacturing theme capturing a lot of these newer things, can be whatever is available in India, can be done. A lot of ecosystem is being developed for EVs, like he mentioned, that can be captured. Maybe there's an independent index coming out for that. And slowly India is moving away just from being an assembly line, or an assembling the products or testing it. It is moving to design. It is moving to manufacturing units or components, supply, parts, manufacture of suppliers, of those. So all these things can be captured into larger themes where India is coming up very well. And maybe slowly we'll go on to the original innovation side as well.
Okay. Any particular theme which I read out from that list of themes which you think would be the next possibility in India?
Yeah, so while we can talk about and deliberate on the table, these are the things that we should be working on. I agree with Aman, though the universe is less, but definitely we should have these themes on the table so that there is a history which gets created. And as time passes, definitely a lot of new companies will come. The index will evolve going forward. But basically, what I also think, which I spoke about, the four themes, where India runs on, consumption, IT, healthcare, and banking, financial services. If you look at all these indices, they are largely large cap bias. 80-85% stocks are large cap because of the liquidity space. Big liquidity factor comes in, and big giant stocks are already there, also there. But if you see in this space, mid and small, lot of work is happening, lot of companies are coming in, the major growth is happening there, right? As an advisor, why I'm addressing this point, as an advisor, if you want a particular theme in this space, which is the fastest growing space, mid and small, there is, hardly products available. Of course, a couple of agencies have filed it, and thanks to NSE for, looking at those indices. We worked very closely with them to, identify those stocks. So If you look at IT, there are only 20 stocks available. But yes, if I want to look at mid and small, currently it's not available. If I want to go to an active space, I don't think they'll be able to offer me that product. Right. So there are a lot of these themes also can be looked at mid and small space, which, there are 20, 30 stocks portfolio are available. And as an active look to through passive route, advisors can use. That's what my submission is. Yes, digital is another fantastic theme. Machine learning, AI can use, news, as I said, balance sheets can be read. The news around those companies, around those themes, can help to generate and design a fantastic digital concept, because everything has become digital now, healthcare to your banking also.
Thanks, Dave. Arun, any of these things which excite you? I'll read out the list.
No need to read. I can't remember anyway. The very, very niche. I thought you missed out nuclear energy. It's because my reading says that at one point in time when Ukraine war was happening, that was one of the most happening themes. But my point is, thematic investment need not be only niche and exotic. Okay. So obviously, we do understand that most of the themes, we may not have an investment opportunity at all now. Most of even the sector indices, like for example, auto or IT itself, will only have 10 or 12 stocks, right? So within that to find, select, like within that, big data, AI and robotics and other things are going to be very, very, at least at this point in time, maybe I hope it will evolve. Like you said, if you have to force fit, then we'll have to dilute and stuff like that. But having said that, thematic investment, and we can probably, a lot of us think of it as a satellite investment. It may be, very cyclical, and therefore, we stick to the known, the large caps and some bit of factor and stuff like that. But I think some of the themes, and Vikash did touch upon that. So if you think about it, like India is a growing economy, right? Fast growing economy. And the components of GDP is what? Like one is investment, the other is consumption. Then you have government spending and exports. These are the 4 components of GDP. And if India is growing very fast, all these or, most of these things will have to fire. So infrastructure, for example, is a theme, right? It's a broad-based theme. It's not a niche or an exotic theme. In a way, it covers most aspects, utilities. You will have oil and gas. You will have real estate. It's fairly diversified and can be a core component of your investment. Similar is the case for consumption. You have FMCG, you have discretionary, you have auto. So those are all good themes that as partners also you can look at. And this is not just about active versus passive. Even consumption as a theme, it's done phenomenally well. You just go and check out the returns. Today also as we speak, last 1 year return is about 35%, Nifty is 25, 3-year return, rolling return. You look at that, it's done phenomenally well, consistent. But, both in active and passive, it's not, picked up at all. So maybe, it requires some bit of change in mindset in terms of not looking at them as a theme and, possibly they can be a larger part of the core allocation. These exotic themes probably will take some time. So even today, we don't have the equivalent of a Meta or a Tesla or a, Alphabet. So we have some way to go in terms of, those opportunities being available. But nonetheless, thematic investments can be interesting.
Yeah. Okay, now I'll change gears a little.
Irma, if you allow me, I think I'll overarching.
Okay.
Right, I agree with Shaily, and infra is the biggest theme which can become. But one thing, Aman, if you can think of, affluent class in India is increasing phenomenally, and it has
Luxury.
Lifestyle.
lifestyle, right? So you have discretionary spending, you have auto, you can have hotels, you can have actually multiple sectors in this. You launch it, I'll be the first one to launch it.
To add on to that, premiumization. So that's another big theme within the consumption theme. So everyone today is, or a large part of the economy today is moving towards premium things, materialistic in nature, but though whether it is tourism, travel, clothes we wear, one of our fund managers at DSPs uses this word very frequently, sneakerization. What is that? Sneakerization. So sneakers for us always were the shoes that you went out to play with. Today, probably kids have more sneakers than we have, but that's another trend. Do we have a play in that space as India is a different question, but is it a trend? It's a big trend and probably came much ahead of time in the Western countries, But are we seeing that in India today? Yes. Is there a play on that? Probably Aman can answer that better. But yes, there are smaller plays, micro plays within the broader ideas that we've discussed that have decent potential going forward.
Prem, if I may just add to Arun's point on performance, the belief typically is that, and this is more from a distributor's point of view, that simple return chahiye to index le lo, but if you need alpha, excess return, you need to do active, right? That's the traditional thought, right? And again, nothing getting into active versus passive fight here, but just a perspective. Nifty 50, for example, over the last 18 years has delivered 12.5% return per annum, which means that if you were to earn more than 12.5%, you had to do active. That's one choice, right? But smart beta factor-based passive products, right, have done phenomenally better as compared to this 12.5%. For example, Nifty 100 has also given 12.5% only, similar to Nifty 50. Nifty 100 Alpha 30. Nifty 100 Alpha 30 is 30 high alpha companies selected from Nifty 100, which is the large cap space, right? Has delivered 15.5% per annum over the last 18 years, back tested, which means a 3% excess return over plain vanilla Nifty 50. Now, if you were to go down the spectrum in terms of large cap, mid cap, small cap, which you spoke of, right? One experimentation that people are doing now is that large cap ho gaya. Now let's get into mid cap and small cap, even in passive. So Nifty mid cap 150, momentum 50, for example, has delivered 21% per annum. So a passive product, exotic, smart beta, is, or at least has in history, outperformed Nifty 50. So just a food for thought that to outperform the broad market, you can still go passive, because passive can actually also beat passive. So it's not always active beating passive or passive beating active. Passive can beat passive. Also, if you allow me to add one more observation that I had about this year's performance, FY24. So FY24, the broad market Nifty 100 delivered 35% financial year. This year, in fact, was a good year for active funds. Because of the 40 large cap equity funds, 30 outperformed this number and 10 did not. And the best performing large cap fund delivered 55%. But the best performing passive large cap index delivered 72%. Nifty 100 Alpha 30. Again, not a suggestion, just a food for thought that passive, at least historically, empirically has been observed, has potential to outperform broad market beta returns, which Nifty 50 delivers.
Prem, sorry, I know we are running out of time, but just a quick point, not necessary to this particular theme. So all this while we've been talking about the ability of alpha, can active and all that, right? Forget about the ability of the fund managers to beat and generate alpha. But I think by design, passives are likely to do better. So I'll tell you what, like you look at a small cap fund. Typically a small cap fund will invest 68-70% in small cap. The rest will be in large cap, mid cap, and also some cash. On the other hand, a pure small cap index fund will invest 100% in small cap. So do you expect a 70% small cap to beat a 100% small cap? So by design, that is why today, out of 30 funds, probably 1 or 2 are beating. And the Spiver return the report talks about 77% of mid-cap, small cap. And this is a phenomena in a broader market movement, right? If you want a mid-cap, the story is same for mid-cap as well. So I know this is not related, but since you mentioned about performance, this is something, not many people think about, right? And if the large caps are beating, they're beating because of mid-cap and small cap. So the actual comparison, if you actually put a 100% large cap active fund manager with a 100% large cap index, he will definitely beat 80%, 90%. By design, that's not happening, right? That is what I think, we need to keep this discrepancy in mind.
Okay, great. Now, finally, I just want to end with one thing. Just in a few seconds, each one of you, your favorite sector fund, and how much allocation would you recommend? Distributors here, this is your chance to influence.
Yes, definitely. India drives on banking, financial, and healthcare. These are the two things where we have to work a lot. Though banking is 33% in overall broader index, but there are a lot of things which are happening beyond top 50 stocks also. Healthcare, a lot of innovations are yet to be done. A lot of lab and a lot of technical, the other component companies are growing. So these two things definitely in overall my portfolio, if I want to add 100 rupees, I'll go to 35 to 40% in these two themes. That much, yes. Ingress.
Shaily.
For us, all sectors themes are joined at the hip of India's resolve for GDP growth and $30 trillion by 2047, but at least $10 trillion by 2030. And if that has to happen, manufacturing, India's share as a percentage of overall GDP needs to go up from 3.5% to 15-16%. India's capital expenditure as a percentage of GDP needs to go higher. And that's why, and if these two are performing, banking can go nowhere, it needs to perform. So for us, the themes are, and we are looking at 10 block of years. We are looking at themes from a long-term 10 block of years, horizon, not just 2-3 years. So manufacturing, infrastructure, and banking. Alongside, I would just take a minute to add, Tata was the first fund to launch index fund on the mid-cap 150 momentum 50 index. We again initiated, that was our second initiation with NSE. And when we did a rolling return analysis of all factors put together, this one topped the charts for a period of 15 years for 1 year rolling, 3 year rolling, and 5 year rolling returns, not just point to point. So I will stop it there. Thank you.
Arun, one sector and how much allocate?
Yeah, two sectors actually, IT and banking. We recently launched, and these are top value recommendation at this point in time. And incidentally, that is also getting reflected in the Nifty Value 20 product that we have. These are the top two sectors, and purely based on numbers. And we do believe, even fundamentally, they reflect value at this point in time. So these two sectors.
So from Bandhan, I would say infrastructure, because it has a lot of sectors which are involved there. And the second I would really bank on in future is consumption. So consumer discretionary is second.
So for us, it's going to be a bank. A lot has been said about what is improved in the banking sector in terms of their balance sheet. But not many people will be aware over the last 20 years. Bank index has been outperforming Nifty for a larger period of time, and the maximum period which they've underperformed Nifty is about 202 days, or roughly close to 200 days. In the recent past, it's been more than 1,000 days that bank as an index has been underperforming the broader Nifty index. So yes, the quality of balance sheets improving and the relative comfort that the sector brings in today, I think bank is going to be an index. Otherwise, apart from that, I think, is there a better way to play a large cap today because of the valuations, relative valuations in mid cap, small cap, and large cap? You can look at an equal weight strategy on the large cap space. So banks and equal weighted large cap space.
Great. Fantastic. So with that, we come to the end of the session. Verandy, take over.
So much.